Tensions in the Middle East are once again boiling over. And at the heart of this geopolitical storm, crude oil. Let's start with what triggered it all. In a dramatic and unexpected move, Israel launched a preemptive strike on Iran, reportedly hitting nuclear facilities and killing several top Iranian scientists and military officials. Iran has promised severe punishment in return. And with that, global fears of a broader, more dangerous conflict are back in full swing. Naturally, markets are reacting, and fast. Crude oil prices have shot up. WTI crude jumped nearly 12%, Brent surged over 10%, prices briefly touched $77.58 per barrel before easing slightly. That's a 5-month high and a 37% jump from crude's early May lows. But the big question now is this rally going to last? Or is it just panic pricing? According to JP Morgan, there's no need to hit the panic button yet. They still expect crude to stabilize around $60 to $65 per barrel for the rest of 2025. Here's why. The Strait of Hormuz probably stays open. Yes, it's one of the most critical oil shipping routes in the world. But Iran relies on it too to export its own oil. So, shutting it down would hurt them as much as it would hurt others. That's why a full blockade seems unlikely. Reason 2. The Middle East cannot afford a prolonged war. From Saudi Arabia to the UAE, Gulf countries are betting big on economic reform and foreign investments. A drawn-out war could derail those plans, something leaders in the region would want to avoid. Reason 3. The nuclear deal isn't dead yet. Despite recent tensions, the US is still pushing for a diplomatic breakthrough with Iran. Another round of nuclear talks is scheduled for this Sunday in Oman. A deal would go a long way in calming the oil markets. And reason 4, global pressure is mounting on Iran. Atomic Energy Agency is voting on June 12th over Iran's non-compliance with nuclear agreements that could lead to the return of UN sanctions, adding more heat on Tehran to negotiate. But here's the other side of the coin. If diplomacy fails and the conflict worsens, analysts warn that crude could skyrocket to $120 to $130 per barrel. So yes, the oil market is on edge. But this may not be a long-term surge, at least not yet. We'll be tracking every twist in the story and how it moves markets globally. Stay with Business Standard for all the updates, and if you found this breakdown useful, don't forget to like, share and subscribe. Want access to Business Standard's premium insights? Join our exclusive LinkedIn communities and connect with top voices in the BFSI space on topics that matter to you.